All right, welcome back to Street Smart. You know why we call it Street Smart? We bring smart guys like Lincoln Ellis on. Lincoln joins us from Chicago. You're in town. You got the family here. Glad to have you in New York.
Thank you so much. Good to be here.
So you're making money this year. You manage about $500 million. You're making money, and it's because of this suit thesis. Tell me what suit stands for.
So, the suit thesis, as we announced it on Street Smart a couple of months ago, it's the staples, utilities, industrials, and technologies. And
S-U-I-T.
S-U-I-T. It suits the environment in which we're investing in, and it also suits what we thought would be the need for investors to be defensive throughout this period. So avoiding financials, really focusing on places that would bring you yields that would be higher than the 10-year Treasury, and that's really, along with some growth, and that's really what the suit thesis does for our guys.
And when you're talking yield, what kind of yield? I mean, it's not what we used to think of as yield.
That's right. So what we did was, when we went through to develop the suit thesis, we wanted to find sectors of the market on a global basis that were yielding more than the 10-year Treasury. Obviously, that's become easier to do.
Yeah.
So anything north of, when we were doing it, it was really the 10-year was at 2.1, 2.2. Now with the trading between 1.7 and 2, a little bit of a sell-off over the last couple of days, that's where we've been migrating. In those utilities, really yielding, although they've been having a little bit of a difficult week. And then selected names in technology to have a little bit of growth component in the portfolio.
Now, what about bonds? You buying any of the corporate bonds for the suits?
We have been looking at them, and they have begun to, trade with the broader market. And when those opportunities have presented themselves, we will continue to look at them. We haven't put our toes in the water in that space yet.
All right, talk to me also about commodities, because you are a very active commodity trader.
Yeah.
Talk to me about the trend and how you're playing it.
So what we've been telling investors is really, since the fixed income markets have become very much controlled by the central bank intervention, that really commodities have become the new bonds, right? They used to say the smart money is doing, look at the bonds. Well, the smart money is really in the commodity complex, and it has been telling you really since the middle of the summer that things have been slowing down, and slowing down in a pretty precipitous fashion. It hasn't been falling off a cliff, but the slowdown is very much baked into commodity prices, from copper through corn and all the way.
How far down do commodities go from here?
You could continue. It depends on the sector, right? Sector by sector.
Okay, so take oil.
Oil could probably drop below 70 if we had a very significant slowdown, but we don't expect it to do that. We think it sits in this trading range between 75 and 85, and if you come out of the backside of this slow patch, back towards $100.
How about wheat?
Wheat, we've had, it's been a very fun year in the wheat complex, right?
You've made a lot of money
and
being long.
Being long, and of late, really being short. Export bans being lifted, excess supply coming on from Australia, decent harvests out there. The real volatile piece this year, and the commodity that made its new high, was corn, and it was making a new high only 6 weeks ago. Now trading in the December contract around $6 when people thought they were calling for 8.5 or 9. That tells you that global consumption is slowing down, and slowing down in a significant fashion.
Now, just quickly, I got to ask you about gold. What's your view on gold?
So as we talked with Lisa a couple weeks ago on Fast Forward, we said that we thought gold would trade in this $1,500 to $1,700 range, and we continue to believe that's the case, and we continue to put on trades that express our ability to make money in that band.
All right, good deal. And you are making money.